Hey guys, welcome back. Hope you had a good day in the market. It is June 8th, 2021. We're going to go over GME, Clove, all these heavily shorted stocks, what the hedge funds are doing, overall market, the option plays. Make sure to sub up, like up, comment down. Happy money sticks around. Let's do it. Market just closed, got a late start here, and if you hear my vacuum in the background, sorry. Gotta keep it clean, man. GME had quite a wild day. We were kind of predicting price action. I was hoping this day, Monday, was going to be larger. That's why I got calls on Friday. Even though Friday was much lower than Monday, the calls I got lost value on Friday, or on Monday, rather. Not a whole lot, but lost just a little bit because of velocity. And then on today, on Tuesday, so basically the pattern we're following is the failed to deliver convergence, where both failed delivers are crossing over, and it's the same thing that happened here in March, and then the same thing that happened here in January. So they both happened 11 days from the day it first jumped on the failed to deliver. So this is the first jump in March, and the 11th day was the peak. Same with here, first day, and then the 11th day. These are trading days. That was the peak. So for us, this was our jump. This was when the failed delivers were. And then this is at 10 days. Today was 10 days. I was hoping the chart was going to look more like this on day 10, 9, 10, 11. It didn't. And part of the reason could be just because we're in a lot higher trading range at this point. In March, we were kind of around that 120 range when it had this run up, and here we're in like 240, 250 range. So percentage wise, we probably would have been up here, 133, yeah. So we would have been up around here percentage wise if we made the same moves that we did here in March, and not even to say January. January is way more epic though, and I think that's probably just because of just all the retail, all the hype, all the, tweets, Elon Musk, everything that's going on, that kind of changed that around for that time. But for here, since our floor is higher, as it gets higher up here, it's just going to be more difficult to break through. Not to say tomorrow, I think tomorrow we still could see a big day. I think it'd be really large, actually. I think we'll probably eclipse that 350 that we did today, and then all bets are off. I mean, back here, the 11th day was a big run, and then it came back down, and then it kind of settled down. It could do that again if it's high enough, if there's margin calls they can't cover that, force liquidation. We also have, is it earnings tomorrow? We've got something tomorrow. Shareholder meeting. Stuff's going on this week, Wednesday, Thursday. So a lot of different catalysts for crazy price action this week. And so tomorrow it could be wild. A couple things just looking at the chart. This day today does look like this day on March 10th, where you've got this big doji on top, and that candlestick is sometimes a sign of reversal. So that's not good for our positive price action. MACD still looks good. The RSI is still fine. And it actually is giving us a little RSI divergence, so I'm not holding that with as much weight anymore, because we had a high RSI here, and then this peak was lower. Lower RSI here with a higher peak, and a lower RSI here with a higher peak. So that should be a sign of a downward pressure, and it might be. I mean, it's going to come down at some point, probably for a bit, but it hasn't happened after two of them. So just a heads up on how I'm weighting the RSI divergence for now. But yeah, today was crazy if you were watching it. This also is like a little flash crash that we had in March and January. So there's different theories on what's going on at that point. So here's the one in March. One in March was crazy though. It rallied all the way up to 348. They dropped it all the way to 170. They had a lot more power back then, and I'm assuming this was everything they had, and they never even got it negative on the day. We were always positive, I think like 3% at least on the day, which is awesome. And speaking of which, oh, AMC actually came up a little bit. We pulled away from AMC today. The divergence on those two stocks is real, and we'll see how it plays out. If it's how I was expecting, or AMC kind of eventually inverses GME, or if it kind of just, well, I think at some point it will actually inverse it, but we'll see if it happens before GME goes, or during, or kind of midway through. But yeah, this price, I'll show you the calls when we're done with this, but my options were crazy. So I guess one of the theories is basically this was like a margin call, maybe on a smaller hedge fund, and they were covering enough to basically, you know, they deposited cash in their account or closed positions, some way to fulfill the margin. And this was maybe them closing positions, some positions, and then, but the same thing that they did, and Adabit shared a post on this, but basically they just re-short it and drive the price back down to keep it from going further and from other hedge funds getting margin called. So that's one of the theories on what's going on here. Yeah, I mean, it's probably true. I mean, it's going down not from retail selling, it's clearly going down from you know, market manipulation, whatever you want to call it, them shorting it, short attacks, using ETFs or borrowed shares or whatever. Borrowed shares is still low, 60,000. So it was 350. Let's see, this was yesterday. So they had these borrowed shares they could have used, but yeah, I don't know if they use those, probably. And on the hourly, so what's good about this, it looks like a double top, which isn't good. However, this red candle, it's not engulfing, which I was happy to see it closed higher than this open. And then this is very bullish. These candlesticks just stayed up on that short-term moving average trend line. Oftentimes I'll use the moving averages as support or resistance, and the fact that they all stayed above that looks good. This big turnaround is somewhat scary. However, if you look at it on the day, we're up 7% and we're still above the trend line. So if you just kind of don't look at this part and just see a nice grind up, it's looking great. This part though is how you can make big money on options with volatility. Volatility gives you money in options. So if you played it right, you could have done well there. Tomorrow might even be bigger. So hard to say on that. But all of the shorted stocks are rallying crazy today, and we've got Clove went nuts, Wish went crazy, Clove's up 85%. This is absolutely nuts. All this SPAC attack, basically, one of the theories was hedge funds were shorting SPACs along with it and using SPACs to build capital, to do different sorts of things. And I remember, I mean, all these have been, it's been months now. It's been what, February, March, April? Yeah, it's been since like February that all of these SPACs and even IPOs have just gotten crushed. And it seems like it's all correlated with GME and them shorting them. And this is a good sign that these ones that have been heavily shorted since, here, actually you can see right here, this kind of started dropping. Yeah, February, right there. This is just Clove as an example. There's a lot of stocks similar to this one. And this means they're probably covering. These are probably actual short squeezes going on. They're covering these because they don't want to cover this one yet, because this one is the big one. So this will give them more time. You know, they'll basically not have the same margin requirements if they don't have exposure to this large of a short position. So they cover that one. Wish is another one. We actually owned Wish shares somewhere around here. I actually ended up selling out, but look at this. This was an IPO, and this thing has just been hit hard. And this is also probably another short squeeze going on. And this, who knows how high these can go? Depends on how much they were shorted, and no one has data to that, like actual data. There's so many different ways they do it with dark pools and ETFs, and so there's no way you can really get a good grasp on that. But yeah, I mean, this one actually might keep going. This has got a lot of upside. Clove could too. It's kind of all-time highs, so it's hard to know. At any point, it could get kind of, the day traders could start dumping on it, and then the hedge funds could actually come back in and short it again, which is probably what they're going to do, and try and make money on the way down. So Kodak was another one. This one hasn't gone too much yet. We've called out a few of them. UONE. This one is doing well. I don't know if it's on the same short. I'm sure this one's shorted somewhat, but I'm not sure if this doesn't really look like a short squeeze is going on. but this is a hype stock that did go crazy back here, so it's broken through like all the resistances, so this one still could keep going. We called it out down here, and it's more than doubled since then. Eyes is another one. Actually, I actually still have my eyes shared. I sold my UONE. Just too much stuff going on. Only capital for certain stuff. Don't over leverage, overstretch. Then it'd be in the same positions of the Hedgies. So eyes is looking good. It's still setting up a nice nice pattern here, a little reversal to the upside. And then Rocket is another one that was heavily shorted. That one's rallying up today. So all these Helicity, so these are the SPACs, the Helicity, the Clove. We've got Helicity shares. This is a let's see, I can't remember what this one was. What is it? Okay, airplane, or no, this is shuttles. This is Astra Rocket Company. So that's this one. Yeah, so we've got a lot of the SPACs and the IPOs that have just been crushed in the last 3 to 4 months, just rallying today. And then GameStop was too. Part of the theory on the rally this morning, I mean, to me, it's a failed to deliver continuation, but that also could be playing into margins, you know, people having to liquidate positions, liquidate other short positions over here, yada, 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 to basically keep within their margin requirements. SPY today was totally tanking when this was rallying, so negative beta is in full effect. If you see these 3 red candles, just SPY was plummeting when this was happening. So it seems like that's kind of what happens with GME. It stays negative beta when it's doing well. It really reflects that. And then when it doesn't have this volume and there's not, I guess, manipulation to hold it down, and it's kind of free to get shares, you know, for shorts to cover or whatever, it rallies and SPY tanks. And that's kind of what we've been saying for a while. The market's crashing, GME's going up, along with Bitcoin too. So Bitcoin's been actually tanking the last like 24 hours. Pretty bad. Not terrible, but the bad thing on this chart is it's just very, very weak, and it just broke this support, and it's probably going to keep dropping. My price target on here was 19,000. I think that's probably where it's going to hit. And honestly, the GME, the short squeeze on GME might not start until something like Bitcoin are at these levels, because you know, then we know the big, if this is part of the problem, if this is part of the basically their long position, if they really are liquidating this to hold off this margin call over here, then yeah, this might have to come down far enough to where this has the least amount of value to where they have to cover on their shorts on GME. So you might have to wait until this fully happens before this actually happens, and this GME might rally up before this gets all the way down to a certain price to where it's you know, where they've closed basically all their long position on this. Or the FANG stocks, you've got Tesla in there also, and then all the FANG. And then, I mean, just looking, you can see it pretty easily with the overall SPY, and I think SPY is teetering and should be coming down. And I'm thinking it's probably going to find the support right here at 397. So we might see a squeeze begin, and little fake squeezes and little kind of pre-squeezes that go up and down, and the SPY might come down some, but the market and Bitcoin and all these long positions the hedgies have, they have to basically close them out completely. It appears before they would start covering here, because that's what it seems that they've been doing. They're leaving this as the last one, so, which is crazy to me. But that I think it just reaffirms how large this short position is on GME, because for them to close all these long positions all over the stock market, just to not have to close their short position on GME is, to me, solidifies how nuts GME it truly can be, and just how hard they're able to fight, and how hard they're going to continue to be able to fight. And yeah, and how long this honestly could last. It could be a bit. It could be a bit. And like I said, we could see squeezes here and there, but not the real one, not where they're fully getting out of their short position. So yeah, if this if today was this March 10th day, then tomorrow probably consolidation and kind of find a floor somewhere. But I'm gonna give it one more day. I'm gonna go over the options now. Our account swung like crazy today. I didn't get out. I wasn't expecting that big of a short attack. I was like pretty impressed. I mean, they haven't done that in a long time, and I guess if they build enough capital closing, then they got cash infused in somehow and shorted it even more. So yeah, I don't know. Back here though, yesterday I was pretty skeptical on this whole thing still, because I was like, this is a pretty good day, but I thought Monday was going to be larger, and then Tuesday, Wednesday even bigger. And the fact that Monday wasn't that big, and then Tuesday was starting slow, and then once it really started to rip, I mean, just the very beginning was like, okay. And then that 5-minute candle, I was watching this thing just growing like a tower. I was like, oh my gosh. And the volume today was good, much better. At least in the first like hour or two, a couple hours, it was good volume. And then of course it just diminished. But at this point, I actually sold one of my calls. We had 20 of them. I had 21. I scaled in one yesterday. And these are way out the money, 570 calls. And I plan to sell them here because these naked calls, there's so much premium I'm paying on them. They're really not going to be, they're really not not the smartest play unless if GME is up at like 600-700 by Friday. If it goes up to 400 or even 500, that's great. But I think I could have gotten more % gains on debit spreads. So these were kind of just to get exposure in case this is a short squeeze week or it starts this week. Now that I've seen that, I don't think it has, and not to say it can't on Wednesday, Thursday, Friday. That's plenty of days for it to get to 1,000 or more. Yeah, I'll probably start scaling out of these, and I did a little bit. I'll show you, but this account had crazy swings today. I don't watch the account balance just because I don't want to affect my trading. So I try and keep this closed so I can't see how much has gone up or down. So I don't trade emotionally. And then I just kind of watch the chart and then my position here and see what I want to close and open. So yeah, this account actually doubled today. we were up to like 50, I think, something. I'll show you the options on it, but 50K on that. That's crazy. It hasn't been since Rocket went up in March, and I guess GME. This account was at 50. But yeah, I saw this thing coming up, and I mean, my technicals would tell me right here I should have sold. And the problem is with my options, the difference between what they were here and here was like they halved. They were like twice as valuable here as they were right here, and I can show you on the chart. But so it's hard to say, okay, I'm going to cut it right here when they were just here. So it's almost, when there's that short of time, there's that much IV and that much volatility, you really have to kind of just scale out of it and cut out of them as it's going up almost. If you wait for full indicators and this kind of stuff, it's like, if there's that short of time, given if I have a month on these, it doesn't matter. It's not going to move that fast either though if I have a month. So yeah, these fives, I mean, they still have value actually, which is crazy because yesterday these were down like 14% at market close. And then even though we dumped today, the fact that we went all the way up there and then came down, there's still sentiment that, that these are holding value up. Oh man, these are crazy. So here's a chart on it. So yesterday, yeah, they're worth like 243 bucks. Our cost on them, my cost on them is 294. So basically like right over here in this area. They shot up today. They hit a high of 1270. Not to say I would have top ticked it, but I definitely could have gotten like this $1,000 range. So we had 21 of them. And then let's just say 1100. So yeah, we're up 23K on those today, which is twice what my account is right now. Which would have been what, 46 grand the account would have been sitting at, which would have been great. I would have taken out enough to bring it down to 30K and put that in the long term and keep trading. But we'll hold on to them, see what happens tomorrow. Yeah, so okay, also to show you on here, once it started dropping and once it crossed over VWAP right here. So it's like, I looked back at the chart and to see, okay, if I would have sold just based on indicators, not on emotion or anything else, it would have been right here. And what would my price would have been? And I looked back and I was like, I wouldn't have sold there. It was way too cheap. So it wouldn't have helped anyways. This was 1055. Excuse me, like right around that 1055. Look at that. That's 45. That would have been 50, 55. Yeah, so like right here. 400 or something, 420. Isn't that crazy? These are worth 1200 and then less than half. Way less than half. Almost a quarter from just the price right here to the price back here. So I sold one of them. I sold one on the way up. I did it. And I got filled at, I was a little early on it, but I got filled at 946. Here it is. I got this one filled at 946. And I was going to start making them free maybe, or just scaling out a little bit. And then it started consolidating. I'm like, oh, I got to wait for this consolidation, wait for it to run back up. I figured this was consolidation. It was going to shoot up again. And then it just had that short attack. So we'll see. Holding on to them. Still have a bit of exposure. On this big dip, though, I actually bought a 410 call for Friday. I wanted to get closer to the money. And this thing was up like 50% at one point, actually. It was 845 bucks, so still expensive. But I actually bottom ticked this thing almost perfect. Just give me a time. Filled 840. Oh, is that it? 410, yeah. Fill 1114. I got this one. So that was, yeah, right here on this candle. Got that one on the dip, and then even just coming up to right here was up like 20%, just because it stopped that downward momentum, and was able to bottom tick it enough that it's actually even still has value, which is crazy. If GME is down like 5% tomorrow, these are all going to be not worthless, but they won't be positive anymore. Unfortunately, that's the way it goes. Up $3 grand a day. It's unrealized. I wish this was like, I could change it to realized. You might be able to. SPY, what did I do? I sold a put. Oh, maybe they closed one out. I'm not sure. That's weird. Oh, Clove. I actually did open up a Clove call today. It's in the money. But it's a high premium, of course. Premiums are crazy. It's still break even. I don't know what my break even actually is on it, but it's a huge premium. 500 bucks for it. The 22 call in the money expires Friday, so see what happens with that. Looks like Hayward actually came up a little bit today. iShares came down a little bit. Yeah, wild ride, man. Wild ride. Curious for the rest of this week. Curious for tomorrow. It's a little unnerving. This candle looks similar to this candle. Like this might have been the top. But if nothing else, maybe we'll do some of this action after. Little higher. I don't know. Time premium is going away quickly. AMC is things red. I mean, it's consolidating, setting up a pendant. So it could run again, I guess. But I can't say. Thanks so much for watching, guys. Appreciate it. I will see you tomorrow. Follow us on Twitter at HappyMoneyYT. There's more to say. The repo market. What was that about the repo? Oh, that DD talking about what Trump did and basically filling the treasury with cash, and then that's why the repo numbers are so high. Something along those lines. Anyways, we also have a Discord if you guys want to get on there. We're having a fun time on there. Okay, thanks guys. Peace out.